Transformative technologies have consistently produced the same market structure before their benefits were realized. A genuine technological leap. Speculative excess far beyond the productive timeline. A crash. And then, years later, the technology delivered for a different generation of investors. 3 documented episodes. The Archive. Episode 1. Railway Mania. 1845 to 1847. The railway was unambiguously transformative. It shrank the effective size of Britain's economy. Nothing like it had existed. Between 1844 and 1846, the number of miles of proposed railway in Britain tripled. Parliamentary approvals consumed a third of national savings. Prices collapsed in 1847. More than half of all proposed lines were never built. But the railways that were built did change the world. Agricultural prices across Britain converged. The national economy became a unified market. The investors who held through the collapse eventually benefited from the transformation they had financed, but many were not around to see it. Episode 2. The Electricity and Telegraph Era. 1880 to 1930. The period of electrification produced a wave of speculation that shaped the early 20th century. Samuel Insull's electricity empire held $14 billion in assets by 1932, a figure that would not be matched until technology companies of the 1980s. The 1929 crash collapsed Insull's empire and thousands of smaller utility ventures. But the infrastructure survived. By 1940, over 60% of US homes were electrified. The technology delivered on the promise, on a different timeline than the market had priced. Episode 3. The Internet. 1995 to 2002. The Nasdaq rose 400% between 1995 and March 2000. Pets.com, Webvan, and hundreds of others raised hundreds of millions of dollars for businesses with no clear path to profitability. The narrative was that traditional valuation metrics no longer applied. As it always is. The crash wiped 78% of the Nasdaq's value between March 2000 and October 2002. But the Internet delivered on its promise. E-commerce, cloud computing, and social media emerged from the wreckage, built by different companies, backed by different investors, a decade after the peak. Amazon lost 90% of its value in the crash. It became one of the most valuable companies in the world. What all 3 share? In each episode, the technology was real. The speculation was disconnected from the technology's actual timeline, not from the technology itself. Each produced a narrative that traditional valuation metrics did not apply. That narrative was part of the structure of the peak. Each crash destroyed significant investor capital. And each technology fulfilled its promise, but for a different group of investors, on a different timeline. In each case, the infrastructure laid during the speculative phase became the foundation for the productivity that followed. The investors were right about the technology. Wrong about the timing. The 2 errors combined to destroy the capital of the first generation and benefit the second. The archivers of today. The artificial intelligence investment wave that began around 2023 shares structural features with prior episodes: genuine transformation, rapid capital deployment, narratives about the inapplicability of traditional metrics. Whether it follows the same pattern is not yet written. The archive only records what has already completed.